In this session, we will learn about aftermarket orders. Before understanding aftermarket orders, you first need to know what is aftermarket hours. For Indian stock market, there are 4 windows of time. First is a pre-market, which is from 9 o'clock till 9:15 in the morning, during which stock exchanges accept orders for price discovery. Second is the regular market hours from 9:15 till 3:30 in the afternoon. This is when regular buying and selling happens. Third is the post-market hours, which is from 3:40 till 4 o'clock. But there are some limitations to trading during this window. And the last one is the aftermarket, that is 4 o'clock in the afternoon till 9 o'clock of the next trading session. And this is what we will talk about in today's session. Aftermarket orders, or AMOs as they are commonly called, are the orders that are placed after the stock market is closed. It's important to note that orders are just placed, not executed, just placed, because orders can only be executed during market hours. The number of people using aftermarket orders has gone up significantly in recent years. Why? Because our lives are getting busier, and aftermarket orders are designed for busy people. People who are not available during the regular market hours for one reason or the other. For example, people who have meetings all day and hence cannot keep track of the market, or those who have a very busy work schedule. And some people work in some very tough working environments. Checking stock prices even over the phone is very hard for them. Sometimes people go on vacation and they don't want to be bothered, or some people have field jobs and they don't get any time during the day to look at the market. In any of the above cases, aftermarket orders can be really helpful. Most of the traders that I work with are typically working professionals who research their trades or stocks at night time and place their orders in advance. Alright, before we proceed further, you should know that when it comes to aftermarket orders, every broker is different. Every broker has a different set of rules for processing aftermarket orders, and they keep changing it. Since I cannot take every broker's example, I will stick with Zerodha for most of the session. So how does aftermarket order work? Let's say at midnight, you place an aftermarket order for buying a stock. Your order will be sent to Zerodha's server and it will stay there until 8:59 of the next trading session, along with thousands of other aftermarket orders. After validating your order for margins and on some other parameters, Zerodha will fire these orders to the stock exchange exactly at 9 o'clock when the pre-market opens. Some of these orders, if matched by the exchange, will be filled during the pre-market itself, that is around 9:08 am, and others will be taken as regular orders at 9:15 am. Now let's talk about the time slot during which you can place your aftermarket orders. Now every broker is different here. The exact time slot for your broker will depend on when the servers of that broker are going down for maintenance. For example, Zerodha allows you to place aftermarket orders in the following time slots. Equity, that is for stocks, from 3:45 pm of the previous day to 8:59 am of the next trading session. For currency, it's the same. For futures and options, you get some additional time up until 9:10 am. Upstocks has given these 2 time slots, and Kotak has given these 3 time slots. You might want to call your broker or check their websites for getting the latest time slots. Most of the brokers allow you to place the aftermarket orders either online or by calling their call centers. There might be some additional charges for call and trade though. Okay, so by now we know that aftermarket orders are orders that we can place after the markets are closed, and we also know the time slots during which they can be placed. Now let's talk about what's allowed and what's not allowed in aftermarket orders, and we will stick with Zerodha. First, Zerodha allows aftermarket orders in all segments: cash, futures and options, currency, and MCX commodities. So basically you can place aftermarket orders for any of these segments. Next comes the product type. All product types are allowed. You can place delivery based orders, that is CNC. You can place intraday orders, that is MIS, or you can place normal orders, that is for taking deliveries in futures and options. So far so good. Now let's talk about the order types and pay attention. The three most common order types, bracket order, cover order, and stop loss orders, are not allowed. You cannot place an aftermarket orders of any of these order types. I'm sure some of you would be disappointed to know that. Okay, now let's talk about price. In Zerodha, you can place both limit and market orders. No problems there. However, some brokers have very different rules about it. For example, some brokers do not allow market price orders, and some brokers have restrictions that the limit price should be within a certain percentage range of the previous close price. A broker can say that for a stock that has closed at 100 in the previous trading session, you can only place limit orders within 5%. Okay, so now let's take a live example of how an aftermarket order is placed. I will be logging into my Zerodha Kite terminal. Here, just like I place a regular order, I will hit the buy button. As you can see here, if you click on more, you get this option of aftermarket orders. As we discussed, we can place MIS and CNC orders. We can place market and limit orders. What we cannot place is stop loss and stop loss market orders, and we can also not place regular, bracket order and cover orders. As simple as that, guys. After this, you just have to hit the buy button, and in the order book you can see this order is in the status of AMO request received. It means aftermarket orders request received. You can also look at the details of this order. So your job is done. The rest will be taken care of in the next trading session. Now your order is sitting with thousands of other AMO orders in Zerodha's server. Exactly at 9 o'clock in the next trading session, Zerodha will validate all these orders for margins and some other parameters, and if successful, your order will be sent to the exchange for execution. So now let me answer some of the frequently asked questions, again keeping Zerodha as reference. Number one, and this is very common, are bracket and cover orders allowed in aftermarket orders? See, Zerodha does not allow bracket and cover orders, and I will talk about this in a little bit, that if you want to do intraday trading, for which essentially people use these two orders, you should not be placing aftermarket orders. Not a good idea. The next question, which is very innocent one, is that does aftermarket mean that I can buy and sell even after the market is closed? See, this is a common misconception. What you're doing in the aftermarket orders is just placing the order. The orders are not going to get executed. The orders will only get executed when the market opens the next morning. Now, a lot of people complain that why are stop loss orders not allowed? See, in an ideal environment, they should be allowed. But I think Zerodha is dealing with the technical restrictions, if I'm not wrong, because they send these orders at 9 o'clock to the stock exchanges. Between 9 to 9:15, stock exchanges do not accept stop loss orders, and that is why aftermarket orders are not allowed to be of the stop loss type. I'm sure there are other brokers who are sending the aftermarket orders at 9:15, and at that point, I don't think there will be any trouble accepting the stop loss orders. Anyway, as of now, stop loss orders are not accepted as aftermarket orders. The next common question that I get asked is that can aftermarket orders be placed during market hours? Now in Zerodha, the only asset class that I know of where aftermarket orders can be placed during market hours is commodities. Except that if you place aftermarket orders for say equity or for futures and options, they will get rejected. Sometimes people place their orders and they get this message, admin stopped AMO. What does it mean? So this is the error that will happen if you place your aftermarket order during the market hours. Sometimes people get this kind of error number 16418, order with invalid attributes rejected by system. So if this is happening to you, it means that you are placing your order in the pre-market, that is from 9 o'clock till 9:15, and placing aftermarket orders during the pre-market is also not allowed. Now there are other reasons for rejections as well, and one of the common ones is not having enough margins. For example, you place your aftermarket order at night time and the system accepted that order, but exactly at 9 o'clock you see that order gets rejected by Zerodha. This can happen if you don't have enough funds to place that order, because the margin check by Zerodha is not done at the time of placing the aftermarket order. It is done at the time when it is sending that order to the exchange. Now sometimes people also ask that are aftermarket orders only for existing holdings? And the answer is no. You can place aftermarket orders for existing holdings if you're already holding a position, or you can place aftermarket orders for creating new positions as well. Another very important question that I get asked is that, say if I'm stuck in a bad trade, what would be the fastest way to exit? Should I place an aftermarket order in the previous day, or should I wait for the next trading session and place a market order? And this happens a lot when you are stuck in a stock that is hitting lower circuit every day. So I don't know about other brokers, but Zerodha has come out very clearly on this topic that if you want to exit a bad trade, your best chance is to wait for the next morning and place a market order. See, a lot of people think that if they place a market order, which is well in advance, they think that that will get a priority over a market order placed in the next trading session. But the problem with aftermarket orders is that they are sent as a big bunch of orders to the stock exchange, and they are queued up, and they take less priority, and they take a lot of time for the exchanges to process those orders. That's why your best chance of getting out of a bad trade in the previous trading sessions is to place a fresh market order in the new trading session. And this last one, people get confused about aftermarket versus post-market. So I think I have explained this earlier. Post-market is from 3:40 p.m. till 4 p.m. This is when people take care of their residual trades. It's not very active. Aftermarket means from 4 o'clock till 9 a.m. of the next trading session. So they are two different things. They sound similar, but they are different. Now lastly, I want to give some advice on how to use aftermarket orders. My number one advice is to never place a market price order. Why? Because the volatility in the first few minutes of trade is very high. And if you place a market order, you are most likely going to get the worst price for your trade. It is always better to place a limit order. My second advice, and this is very important, is that do not use aftermarket orders for intraday trading. See, aftermarket orders were not designed for intraday traders. Aftermarket orders are designed for busy professionals who don't have any time watching the trade during the daytime. Aftermarket orders are designed for busy professionals who do not get any time during the day to look at the market. Now, if you want to do intraday trading, by definition, you should have enough time so that you can look at your trades and manage your risk. But if you are placing an aftermarket order for intraday, it means you are being careless with your trade. And I strongly advise you not to do that. And my last advice for aftermarket order is to never chase a news flow. See, what happens is sometimes after the markets are closed, there is a big news flow in a stock. Maybe they came out with some merger plans, or maybe they came out with some new product introductions, or maybe something which is going to trigger a big price movement the next day. Now, people sometimes get excited about these news and they want to buy that stock first thing in the morning. And in that excitement, they place an aftermarket order. But this thing can be very risky. Because what happens is, in the stocks with a heavy news flow, there is a tendency of this stock to gap up a lot, sometimes 8%, 10% and even 15%. And then from the top, they can fall down drastically. And then depending on the nature of the news flow, they may even fall down drastically 8 or 10% back to where they were. So if you place an aftermarket order to buy that stock right at the opening, now you will be risking a lot of capital, because immediately after buying the stock, it may tumble and it may fall down drastically. So always remember that aftermarket orders are designed for investors, not for traders. Okay guys, this is it. I hope you understood the concept of aftermarket orders and what to do and what not to do while placing the aftermarket orders. If you have any questions about the aftermarket orders, feel free to ask them in the comment section below.